Right, 12:30 in London. Let's get started. I hope everyone's read the risk warning at this stage. It is the weekly market analysis webinar. We're going to just cover some of the major markets that are traded at LCG. And if you have any questions, certain markets you want me to cover, certain developments in the market you want an opinion on, obviously feel free to let me know. Just send a note through the question box. Right, let's jump over to the trading platform. So starting off in traditional fashion with the euro. So this is something I've been mentioning in the daily updates via YouTube, is that we've got something of a breakout taking place here. It was 117.50 that was a key level in my mind. That coupled with the break of this downsloping trend line, and on a bigger picture, if I just jump out from this daily chart, you can see that basically this was there's a bit of a zone in terms of the base of this former consolidation here, but we obviously broke higher, came back, retested, came up to this much longer sloping down trend line, which I'll remind us all about in just a second, came slumping back down, having hit that longer term resistance, back down to this support, went for a break, and the break didn't really go anywhere. And at the moment, it's starting to look like a false break lower. And if that is the case, backed up by the move back above the 20-week moving average, the break of this downsloping trend line in the short term, this false break lower spells upside for the euro. So if I just do have a quick look at that monthly chart, this is the kind of thing we were looking at. So you can see, okay, price is obviously sold off pretty heavily, having hit that longer-term technical resistance, but they've held on. In fact, there was a bit of a culmination of moving averages on a monthly chart right down at this 115 level, and it looks like, based on this you can see quite nicely on the monthly chart, this hammer pattern here is a strong indication of a reversal to the top sides, and we're seeing confirmation this month in September. And obviously, bearing in mind September ends in a week, we've got something of, if you just go purely on the bodies of these monthly candlesticks, almost an engulfing candlestick, potentially even engulfing 2 previous months, or even 3 previous months if we're talking purely bodies. So quickly back down to the daily chart here. Obviously, we're kind of struggling with the 118 round number, but for us, the fact that we've broken that 117.50 looks like we've held it. If we can show a positive close today, another bullish engulfing, this is the short-term trend moving in line with this long-term reversal. It looks like an opportunity to ride this market higher. Okay, moving over to the pound, slightly different environment here. Again, this was something I mentioned on today's YouTube live. If I jump out to the weekly video, you can see there's a big weekly reversal that took place here. Depends how it pans out, but at the very least, a sort of gravestone doji that, or potentially a kind of pin bar pattern. If you are talking about a pin bar pattern, what you want to see is the price not move beyond this horizontal line here, which represents just the high of this first of what will be eventually 3 candlesticks. So this is our weekly chart. We basically want the high of this week to have basically already been put in if this pattern is to ideally work out. Literally where the price is right now, around 131.45 or 131.40, somewhere in that zone. We really want things to peak out about here, price to roll over, to show us that this weekly candlestick has some legs to the downside. So we had that big reversal lower, we pushed up a bit, but we can't get above that previous week's high, and then we roll down and retrace some of this rally higher. So that's what we're aiming for. If this market is to turn lower, then probably we would just default to looking at round numbers as potential bases. 129 is probably a level that strikes for me because that's where we initially topped out, we braked, held it again, then we were able to push higher. So 129, a level to look out for if this 131.50 holds. Moving on to dollar yen, we've referenced multiple times this long-term downsloping trend line. We had the one false break on the weekly basis, treaded water below it. This break that we're in at the moment potentially looks a bit more promising. We've held on to 112 for the past, well, at least for the past week or so. Excuse me, just sneezing there. And really, for this to actually take off, we need to take out this the high from July, which is 113 and change. A breakthrough 113, this long-term trend line has an extra level of confirmation. We will face some resistance down at 114.50 because we had numerous peaks through there, but technically an uptrend would be in place, and on a daily basis we'd be looking for pullbacks. Moving through to indices, obviously the FTSE was really struggling just a week or so ago. Into that the beginning week of September, really saw prices come off quite heavily, but obviously it's been this tanking of the pound and all the Brexit uncertainty last week that helped quite a big rally off the lows. So no particular justification for why 72.30 can held rather. If we look at this rally here, we can see it is the 61.8% of this rally in terms of Fibonacci retracements, but we're kind of, we'll kind of pluck in justifications out of nowhere. That 172.50 really is a round number that we could have paid attention to, but for the time being, we've rammed straight into this 7487 level, which is these two lows here. And you can see that's why we ended Friday off those highs a little bit. It wasn't a big reversal, but we do want to see what happens today. If we can close through this level today, it's a good chance we can see higher prices. If we see a reversal from here, it's a reversal at old support turned resistance, in line with what is still a fairly kind of bearish looking trend. We could see a substantial pullback. There's no solid trend in place here with the FTSE. If you scroll out to this weekly chart, you can see that we've basically been chopping around in a longer term range. So it's any trends you're following on the daily chart obviously don't have the legs of one of these charts where there is a better longer term trend in place. So again, you can kind of see on almost on a weekly basis here, if we break this 7487, which are these two lows here, we'll probably head up to challenge that 7580, which was these two peaks through here, which has been a bit of an issue for the FTSE. But again, it's kind of it's range bound trading, looking for these longer term resistance levels and shorter term reversals, rather than trying to ride some trend at this point. Similar with the DAX, if we pull out to the weekly chart, you can see we had something of a potential head and shoulders pattern here, but it hasn't played out for now. Here was the support. You can draw it in various locations. Here is obviously this low, perfectly matched it over here. This, in essence, you could say this area here so far looks like it was just a false break, and it was the 11,870 level, say, if we're to make that a little bit more cleaner, which is basically held. So we can draw some trend lines through these highs, but again, it's not really the right environment for drawing trend lines just because we're in a range. So you can't really put as much emphasis on them. What we want to see is the beginning of a trending period. We're still in this meandering downtrend at the moment. So maybe if we can get at least a break of this trend line that's somehow coming through here, if we pull back perhaps to 12,130, which was the lows here, and this little pick here, if we could pull back here and then subsequently take out the trend line, maybe we could find a bit more market direction. Bearing in mind that we've got a confluence of resistance here at this downsloping trend line and the 50-day moving average. So potentially some weakness could come in here. And again, if it doesn't, it's a sign of strength. Switching gears to Wall Street, obviously this one of the more exciting markets at the moment because we did get the record high last week, but there wasn't much of a follow through yet. Perhaps understandable because we've been on quite a substantial rally, and we are due a bigger pullback. What we want to see though is that pullback end before the 26,150. That's this old high here. 26,150. Call it a zone up to 26,200, which, given how many points at a time the Dow is rallying, it's a fairly narrow range. Right, okay, that was impressive. That's the first time I've been completely bumped out of GoToWebinar, the webinar software. So always good to experience new things, perhaps not so much in that case. Okay, so we lost a couple of minutes there. I'll wrap things up by saying we're still holding on to this rising trend line in gold. So hence the rapid decline has kind of stalled basically, but I think it could be this week's Fed meeting where we could actually see a breakout from this this trading range we've been in for the last several weeks. And obviously this resistance through here, this sort of 1210 level, is really what everyone's watching. 1210, or if you prefer trend lines, just connecting through the highs here. So you can either obviously place your orders above this line, look for the push higher, but this, with the volatility around the meeting, obviously there's potential for false breaks, but at the moment the trend is lower, and it probably does favor a false break purely from a technical basis. Last but not least, the oil market. We're looking for a daily close above $80 a barrel after breaking out of this sloping channel. Market looking very bullish technically, and obviously we had OPEC, who had the meeting over the weekend, who didn't raise supply, so that's fundamentally supportive of the market too. Right, let's round things up there. Thank you very much for attending, everyone, today. This was your weekly market analysis, and make sure to follow me on Twitter and TradingView, and we're now doing daily updates via YouTube as well. Thanks very much. Jasper signing out.